Hello and welcome to Mining Review Africa. And we are at Mining Indaba 2026, and I'm speaking to Zack Hartwanger of Open Mineral about the critical mineral space and Africa's role in it. Zack, always great to chat to you.
Always a pleasure. Thank you for having me.
Okay, now, no doubt there's a race for Africa's critical minerals. It's the US on one side, it's China on the other side, and these developments are happening rapidly. Can you tell me, is this a win for the African mining sector?
So I'd say yes, it is. I think with the competition, you do see increased pricing. And with that, the value of these companies, the mining companies in particular, as well as the auxiliary services, those are all increasing. So overall, the value of the minerals below the Earth's surface become more valuable. There's more access to financing in order to extract them. And so that should benefit the communities that these mines are situated in.
Absolutely. Now let's talk about financing these projects. In your view, what is the best way to fund these critical minerals projects throughout Africa?
So I think that's a very interesting question. And I think over the last year, you've seen a lot of new methodologies come into market, particularly around the infrastructure projects to kind of get them out. But along with that, we're seeing now the US government taking equity stakes in projects. China is more, they fund the infrastructure and then get the rights to purchase the minerals as well as set up schools. So those are the two kind of major players from East versus West. But otherwise, you've got the traditional equity through public markets. You've got private placement from various institutions, and then debt financing. Export credit agency financing is also becoming more and more popular, which is again tied to certain geographies. And then from our side as mineral traders, we do offer prepayment, which is when a mine is coming closer to production, we provide a facility that can get them across the line, and then we amortize that by a discount to the trading value of the materials. So if projects are at that stage, we find more and more mining companies preferring to take those, just because it's less constrictive and it works along with the mining companies to achieve their goal of increasing their distribution and their outputs.
Okay. Now, last year, Zack, you and I were on a panel discussion about the Lobito corridor. Talk to me about how projects like that span across various countries, how does that benefit the African mining sector?
So also another good question, Gigi. You're coming with him today for sure. But I think those type of infrastructure projects are so important. I mean, firstly, it helps the materials or the inputs to the mining companies better or easier to get there. A lot of the times these machines and plant have to go across multiple borders. There's obviously security risk across those. So it's a big benefit. It's very much beneficial to the mining companies to have that, as well as the exporting of materials. It's a far safer environment, but along with that, the projects themselves, they create a lot of opportunities for local contractors, local companies to get involved through the tender process and actually the construction of these infrastructure projects, as well as general upliftment of the area once the projects get rolled out into operation.
Absolutely. Now, one final question, Zack. Copper's at high price levels at the moment. Talk to me about what, in your view, do you see as the critical minerals where prices will rise in 2026, and also which are the ones expected to go down?
That's a very good question. So we have had quite a big rally, especially in the last quarter of 2025. We have silver and gold pushing all-time highs. There's been a slight correction over the past few days. Those being the precious metals aside, the critical minerals, lithium is coming off a very low base, as well as nickel. So we expect those to kind of perform quite well, but again, it's more from a base perspective. Copper, with the electrification of the world and the energy transition, we're always bullish on that. We do expect quite a bit of volatility with Trump and all of his antics and geopolitics, that all has an input onto the price fluctuations. But ultimately, in the long term, this electrification and green revolution is on course, and with that, we expect a kind of rise of most of the metal prices and most of the critical minerals.
Great stuff. Well, Zack, always a pleasure to speak to you.
Thank you very much
for your insights and for joining us.
Always a pleasure. Thank you for your time.
Great.